Welcome to Level 4, Banking Systems Explained. Today, we open the machine behind money.
Banking system equal economy's nervous system. Data pulses through skyscrapers like neurons.
Three layers run the system, but shadow banks are the villain nobody warned you about.
Time to open the hood. This engine is loud, complex, and absolutely necessary.
$100 enters the bank and becomes $10 physical. Eris zooms in on the reserve ratio. Banks keep only a fraction. The rest enters the loan creation universe.
This is the money multiplier Plakini, the quiet engine behind modern economies.
Banks aren't isolated. They form a giant interconnected organism. Money became information. Banking became computation. Your deposit fuels loans. Loans fuel deposits. Endless loop. Slow-motion interest payment animation. Eris accelerates playback. Interest scales with debt. Bigger loans for bigger profits for banks.
Creditworthiness decides how much money you're allowed to create through borrowing. When you borrow, the bank generates brand new money into existence.
Commercial loan pipeline. Eris follows flow from business to bank. Businesses borrow at scale, creating far more money than individuals.
Mortgages are the largest money creation engine in most advanced economies.
Housing graphs skyrocketing. Lower rates make borrowing cheaper and demand spikes. Prices rise. Bank profit chart. Eris marks net interest margin. Banks earn between deposits and loans, The spread is everything, 23.
Banks also earn from fees, sometimes too many.
Your bank pays you little, lends at much higher rates. Classic spread game.
Fractional reserve diagram. Eris points to tiny reserve ratio. Banks lend more than they hold because withdrawals rarely happen simultaneously.
If they do withdraw at the same time, that's a bank run.
Old photo, historical bank run. Eris overlays modern digital run imagery. Digital runs are faster. Panic spreads in seconds.
Deposit insurance prevents panic, Craig, stabilizing trust in banks.
Systemic risk map. Eris shows domino chain. One bank failing can knock down others. Interconnection cuts both ways. Liquidity waterfall animation. Eris follows flow. Banks must hold enough liquidity to survive stress, or they fall apart.
Loans are assets for banks. Your deposits are liabilities.
Leverage bar stretching long. Banks use leverage to multiply profits and risks.
Regulator icon appearing. Eris faces regulatory tower. Regulations exist because banking risk can blow up entire economies.
Shadow bank silhouette.
Money market fund hologram. Eris traces liquidity flows. Shadow systems move trillions daily, usually unnoticed.
Repos allow banks to borrow overnight, like financial oxygen.
Clearing and settlement keep payments secure. No room for error.
Swift message flying globally. Eris follows transaction across Earth. Banks communicate through encrypted networks to settle globally.
Block 1 recap screen. That's the foundation. Now let's meet the bosses of the entire system.
Meet the boss of bosses, the central bank, Adiri, where money policy is forged.
Central banks control interest rates, the steering wheel of the economy.
Interest rate dial turning. City lights dim or brighten with each shift. Raise rates, economy cools. Lower rates, economy explodes with credit.
Money supply wave expanding. A young East Asian woman, Eris, surfs on it. Central banks expand or contract money by controlling lending conditions.
Giant inflation gauge. Eris, a young Caucasian woman, taps it. Needle jumps.
The challenge is clear. As we combat rising inflation here, we must carefully weigh the impact on the falling
QE. Central banks buy assets to inject money into the system.
The central bank buys bonds from the banks, flooding them with liquidity, which then moves into the markets. This ultimately lowers the yields.
Liquidity makes markets smoother until it becomes a tsunami.
Balance sheet expanding massively. Central bank balance sheets balloon during crises. Why? Safety first, cost later.
Housing market reaction.
Home prices spike instantly.
Cheap credit fuels housing booms, sometimes bubbles.
Markets love low rates. They throw a party every time rates drop.
Rate hikes tighten lending, slow borrowing, and hit asset prices.
Corporate loan chart shrinking. Eris, a South Asian man, watches borrowing fall. Expensive credit reduces business expansion and investment.
Inflation monster growing.
Consumer spending line dropping. Eris marks the decline. High rates make consumers cautious, believe spending slows.
Bank lending pipeline narrowing. Banks lend less when borrowing becomes expensive.
Words alone move markets. Guidance is a powerful tool.
Flashback, 2008 crisis. Eris overlays central bank response timeline. Central banks rescued markets via emergency liquidity and asset purchases.
The central bank announces unlimited liquidity, whatever it takes.
Emergency lending window glowing red. Lender of last resort. Central banks rescue banks when nobody else will. Interbank lending frozen. Eris restarts it by injecting liquidity. When banks stop trusting each other, the central bank becomes the bridge.
Forward guidance projection. Expectations steer markets as much as actual policy does.
Exchange rate globe spinning. Eris highlights currency impacts. Rate differences influence currencies, trade, and capital flows.
Low flow arrows.
If inflation rises too fast, central banks must act, even if painful.
Rate hikes cool inflation, but risk job losses, Nuri. Harsh trade-off.
Market tantrum chart. Eris calms it. Markets panic when policy shifts unexpectedly.
Yield curve bending. Eris straightens it. Inversions signal recession foam. Central banks watch this closely.
Mortgage rates rising. A young Caucasian man named Eris watches homebuyers panic. High rates shut down housing demand almost instantly.
Corporate bond spreads widening. Eris highlights risk. Businesses pay more to borrow, reducing expansion and hiring.
Rate policy affects government borrowing costs too.
The central bank independence crest. A young East Asian woman, Eris, salutes it.
Political pressure waves. Eris blocks them. But pressure always exists, especially during crises.
Policy lag hourglass. A young Hispanic man named Eris flips it. Monetary policy takes months to show effects, slow but powerful.
Central banks coordinate globally during major shocks. That's the Monetary Command Center. Next, how banks talk to each other.
Every payment you make travels across hidden rails built for speed and accuracy.
Swift message packet flying across globe. Ares follows it.
Clearinghouses match, convert, and validate payments before they settle.
Settlement status, finalizing the payment. No reversal. No takebacks.
Interbank loan corridor glowing. A young East Asian man named Eris walks through it. Overnight rate dial. A Caucasian male named Ajeris corridor.
Banks deposit extra cash into liquidity pools. Others borrow from them. Reserve deficiency alert. Eris reroutes liquidity. Short on reserves? Borrow overnight. That's the interbank lifeline. Intraday credit timeline. Eris tracks high-speed arrows. Banks use intraday credit to smooth transactions during busy hours.
Payment queue jam. Eris unclogs it. When large payments queue up, banks risk missing settlement deadlines.
Repos are loans backed by collateral, essential for liquidity. Reverse repos drain liquidity and stabilize conditions.
Bank E to Bank B. Eris highlights the flow steps. Every big payment involves messaging, clearing, and settlement. 98.
Sprint banking map. Eris follows cross-border bank-to-bank paths. Some banks rely on partners worldwide to move money across borders. Interbank stress appears first when liquidity dries up, an early crisis alarm.
2008 interbank freeze flashback. Eris highlights collapse points. In 2008, banks stopped trusting each other. The entire system cracked.
Central bank rescue beam. Central banks injected liquidity to unfreeze interbank lending.
Collateral quality comparison. Eris sorts assets. Higher quality collateral clears cheaper borrowing in interbank markets.
Counterparty risk meter. Banks evaluate the risk of the borrower. One failure can cascade.
Correspondent bank in trouble.
Eris blocks payment.
A failure upstream can halt transactions downstream.
Settlement failure alert. A failed settlement can break liquidity chains instantly.
Liquidity buffer tank. Caucasian male Eris pours reserves into buffer. Banks maintain liquidity buffers to handle unexpected shocks.
Retail versus wholesale payment map.
Payment batching animation. Eris compresses many transactions into one. Batching reduces cost and improves system efficiency.
Real-time gross settlement, RTGS, grid. Eris highlights nodes. RTGS settles payments instantly and individually, no batching.
Netting reduces liquidity needs, but increases systemic risk.
Cross-border payments remain slow and expensive due to legacy systems.
Blockchain settlement metaphor. Eris taps digital ledger. New technologies aim to replace old pipes, but adoption is slow. Liquidity bridge graphic. Eris stabilizes the bridge. Banks rely on liquidity bridges to move cash across entities. Payment outage warning. Eris fixes broken node. System outages can halt national economies in minutes. Interbank stress heat map, glowing red. Eris scales down intensity. Stress spreads through networks, rarely isolated.
That's the hidden world of interbank plumbing, deeper than most imagine.
Wealth snowball rolling downhill. Eris steps aside as it grows exponentially. Once wealth starts rolling, it compounds without...
More assets, generating more income. It's truly infinite.
Rental income pipeline feeding investment accounts. Eris follows the stream. Cash flow fuels more investments, which create even more cash flow.
Capital gains feeding reinvestment engine.
Dividend machine paying out endlessly. Dividends stack, reinvest, and multiply. The loop fuels itself.
Cheap loan secured by big assets. Eris borrows with tiny interest. Borrowing against assets lets wealth stay intact while still spending.
Business equity compounding each quarter. Earnings circle back into the machine. Businesses reinvest profits to scale faster than any wage can.
Interest rate drop effect diagram. Eris highlights rising asset prices. Rate cuts inflate asset prices, boosting wealth for asset owners.
We absolutely nailed the bottom on that dip.
Look at those returns. It's beautiful.
Workers sell when scared. Rich buy when scared. Loop favors the bold.
Real estate portfolio expanding automatically. Properties cloned behind an elderly African-American female named Eris.
Education access gap chart. Elite schools glow gold. South Asian rich kids get elite education. Others get debt. Inequality becomes inherited.
Networking web of wealthy circles. Eris points out closed loops. Opportunities circulate inside wealthy networks too, not open to all.
Capital growth curve surpassing GDP. Eris marks divergence. Capital grows faster than the economy, widening the gap yearly.
Wealth pyramid rising upward. A young East Asian woman, Eris, traces expanding top layers. Return scale with size, big money snowballs faster.
Diversified portfolio resisting shocks. Eris shows stability. Big portfolios absorb volatility, letting compounding run smoothly. Crisis graph with V-shaped recovery. Eris highlights rebound. Crashes hurt East Asian male workers long-term. Capital rebounds stronger each cycle.
Middle class stagnating chart. Eris stands beside the flat wage line. Relying only on wages means falling behind automatically.
Wealth engine running autopilot mode. A South Asian male named Eris toggles the switch. Rich don't outrun the system runs for them.